Welcome to Home Service Happy Hour, brought to you by Service Monster. Here's the math I want you to do when some CPA person tries to sell you some shit. Let's use a $50,000 truck. This could be any asset. This could be any service that you would pay for. And we're going to use this progressive tax rate system. And I still got it up here. It's still on my screen. We're going to look at that and we're going to put a bracket on there based on this $200,000 business of what you would really pay in taxes. And therefore, that's what you're going to be saving if you buy this truck. So we're just going to do this simple math real quick here. $50,000 truck. You're going to buy it in December rather than in March, right? Let's buy it sooner. We're going to save all this money. And so you buy this $50,000 truck. And we also have to make one other assumption, which is that you can do what's called a 179 deduction, which you generally can. Michael, you're on mute again, just in case you didn't realize that. I just like, this is a forewarning. Oh, look at you bringing her down. So it's a $50,000 truck. We're going to assume that you get to deduct it all in year one, which like historically that wasn't the case, right? This has only been around for the last few years here. Last 5 to 10 years. I don't know exactly when the 179 deduction started. I think it started under Trump the first time here. But basically that says you get to like fully expense that asset. You get to write off all 50,000 of it versus it used to be that you had to write it off over 5 years, which would make this case even worse for buying an asset if you had to write it off over 5 years. It makes it better if you get to write it off in year one for the tax savings sooner rather than later. Well, you got this $50,000 truck and you're going to buy it. Again, keep in mind, like the first thing that happens when you buy a $50,000 truck is you're out $50,000. Like that's a lot of real money. Now you might finance it, but now you're going to incur interest charges, and those interest charges are going to for sure offset this time value of money thing that I'm going to talk about here in a second, this is really like the math you need to be doing on this. You buy this $50,000 truck. Let's just ignore this immediate cash. Let's assume you financed all of it. So it's not even like you're out $50,000 right away. Even if you did finance all of it though, you still get the tax write-off, which is pretty cool. You still got this asset. You can still show that you purchased it. They don't count that you have a loan against it right away. So you got this $50,000 truck. Now, a $50,000 truck doesn't mean you saved $50,000. If we pull up this progressive tax rate thing here that we had, and let me share my screen again. We got this $50,000 truck. Let's say we're a $200,000 business. Just for like simplicity's sake, let's say our weighted average tax rate in here is like 15%, right? Like between all of, like we got 10% charged. I'm doing a married filing joint. So assuming you're married and you're collectively making around $200,000, whatever. The tax rate roughly is going to be around 15% weighted average between these different tax rates as you go up. Hey, home service heroes. Thank you guys so much for tuning into our home service happy hour content today. I sure hope you learned a little something, and I sure as heck hope that it was entertaining. If you did find it fun and entertaining, make sure you like and subscribe to the channel for more cool, fun, entertaining business content. And speaking of which, stay tuned. There's a little more here and a little more right here. Check it out.